Good evening, everyone. Before we get into tonight's update, I want to give you a quick overview of what to expect. First, we're going to get into XRP, but we're not going to look at it in the short time frame tonight. We will for a brief second so that you can understand what the current formation is looking like. But we're going to look at the XRP chart going back to 2013, and we're going to show one of the biggest problems with the fact of why we're so bearish right now and what needs to be done to push us more into a bullish thesis. The fact that XRP pushed for a multi-years, 3 to 4 years, and completely failed to break out of the current formation is a very big telltale sign. And we'll go back and look at the $1.98 from 2021 and how it created a topping reversal. And we'll get more into what a topping reversal is as well, because I feel like a lot more people need the more reasoning with the definition behind it. And I'm not saying for a more simplistic reason, but I take the approach here, and I know most people will target the more advanced audience, but I take the approach that I need to take this the most simplistic way possible for somebody who might be doing this the very first time. So I'm talking about a topping reversal. So I'm going to show some definitions of a topping reversal and also show on the pattern where I believe we hit a topping reversal in 2021. And it's going to show us the biggest problem with where we're at right now, as this is a perfect bear market rally and a retracement on the topping reversal on what we can call the right arm side. So we'll take a look at all of this and more. But what you could do for me is hit that like button, as it greatly does push me through the analytics, and you have no idea how much it really does help. As we look at the Dow futures, is up 145 points right now. S&P futures is up 3 points, and the NASDAQ futures up 1150. We've got the Russell 2000 futures up about $1.60. So we've got a little bit of positivity coming in the futures market right now, but it's still very early. So we'll pay attention to that as well. We have to look at the U.S. dollar currency index, as it still is well below the $1.05 mark. Make sure to hit that like button as I play the intro, as it does greatly push me through the analytics. Good evening. 6:30 p.m. Eastern Standard Time on this Wednesday, March 1st, 2023. I'm XRP Future Millionaire, and I reside in the great state of Michigan. So as we can see, XRP sits at 0.3838, up 2.02% on the day. We flipped the clock in about 30 minutes, so this will be a very important technical analysis. As I mentioned in the opening, we're going to get into a topping reversal. I'm going to show you 5 key signals that you may have hit a topping reversal, and 5 indicators we use to tell us exactly that, or 5 indicators that might flash that we've actually reversed. So right now we have the key resistance of R1 at 3860. We have R2 at 3930 approximately. We'll say 3940. And then R3 is at 414. Right now we have S1 at 377. S2 at 369, S3 at 362. So those are your nearest support and resistance. Right now, I still believe, even though we could say we're in a broadening wedge, I still think right now, until we were to break out, we can say that we're in a falling channel. As up here where we have this X up here moving around the screen. Actually, you know what I'll do? I'll just pull an arrow out. Up here, you got first hit, resistance, support, resistance, support, support, resistance. So we've at least confirmed a falling channel of sorts, as we've got 3 hits on support and resistance. Now we could move it out and say we're in a broadening wedge, but I do like to see this falling support, or some could say we're even in a bigger bull flag. So we're going to see. The main thing here is, though, we need to break this downtrending resistance. It's been a major downtrending resistance. We need to break this 394 level to see if we have any higher ambitions here in the short time frame, because I'm not going to spend a lot of time on the short time frame today. But we need to see if we have any higher ambitions to come up here, and this would be the 432 level, followed by, ultimately, we're going to see if we can push the broken bull flag, which is somewhere up here around the 454 level. So that's where X marks the spot, so we put a lot of credence into that. But then when we look at the more all-time pattern, ladies and gentlemen, this is what we need to pay attention to. I know we get excited about the short term, But when we look at this in the longer term, we can see the pattern formation has plenty of room on this downtrending resistance. And that's up here at about 44117. And the uptrending support down here is at 338. So basically the range, the true range here is 338. And that's the 2020 uptrend. And then we have the downtrending resistance as well. That goes back to about 2022 in May. So 338 all the way up to 442. So 442 down to 338 is your range. Now, if we take a look farther on this, you can see the 2017 uptrend down here. And if we break the 2020 uptrend, the next true uptrend brings you all the way down to 18.6. So now, if you break this uptrend at the 334 level, approximately 338, wherever you want to put it, now you've got to deal with roughly the 18.6. Well, if you break the 18.6, then you go to the true uptrend of all time for XRP chart from 2013. That really could bring you down. And we're talking April of this year, if you were to hit it then, which I'm not saying it's going to do that by any means, but that's just for point of reference. That would be around the 1048 level on the true uptrend from 2013. So it's not so cut and dry when we're looking at the XRP chart. It's actually very interesting. So now, when you're looking at this, the thing that has always scared me on the XRP chart, and it will continue to scare me until we break out of these ranges, is the fact we went all the way over here. Let me bring out my drawing tool. We came all the way over here. We topped. And that's all the way in February of 18. Came all the way around, topped again in 2021. Now we're kind of just doing its normal operating procedure. Now, the thing that I acknowledge is we could come all the way up to that downtrending resistance and actually fill in a much wider pattern. And if you do, we'll bring that out into the wider scope here in a second. So if we do that, we can see that the wider scope here, we come all the way up here. We hit it a third time. And this could give us wider range up to about 86 cents. That's why I keep saying it is so important. I don't want any excuses from anybody. It's so important right now that if you were trying to buy 10,000 shares, and look at me, 10,000 shares, when it was $1.98 or even $1.66 when I told you to back off, that's $16,600. You do it at $1, it's 10,000. Right now, 10,000 shares will cost you about $3,840 for 10,000 shares. You're talking about a $13,000 savings from just $16,600. So, what I propose is we buy our stuff when it was sub 40 cents. You even had to say in sub 30 if you were doing it when I was. And we built it through sub 40 cents. Now the point is you can have your 10,000 shares and you have your cake and eat it too. And what I mean is, instead of spending $16,000, now if it does go sub 20 cents by some miracle, then you can start building up and drop the hammer. So you've already got 10,000 shares like you wanted in case it goes up. But if it doesn't, and you get the chance at sub 20 cents, you can make it 2-3 times the amount of shares you were thinking of holding. Even if you raise it from 10 to 20,000, you've got a bigger hold of the market. That's the point. You can't get caught with your dick out right now, with your pants down and not know what you're doing. You've got to have a plan. And now the biggest problem I have, let's go back to this. Let's go into the daily, is the fact that after all these years, this failed. It failed, ladies and gentlemen. I mean, look at this. It failed from here in January of 18. It came all the way across, and it failed in April of 2021. It took 3 years, almost 3.5 years of consolidation, and it floundered out. Now, the other thing I'm going to tell you that's very dangerous here, and nobody wants to talk about it. Ready? I'm going to write it down so nobody can say I didn't. And I've said it a lot before. QE. That's quantitative easing. See that? Quantitative easing. And now, I'm glad you asked, what's quantitative easing? Let's take a look. So, quantitative easing stands for quantitative easing, which is a monetary policy tool used by central banks to increase the money supply and stimulate economic growth. During times of recession or low inflation, it involves the central banks buying government bonds or other securities from banks and other financial institutions, which in turn increases the amount of money available in the economy. The goal of quantitative easing is to lower interest rates and encourage lending and investment, which can stimulate economic activity and boost inflation. However, there are also risks associated with quantitative easing, including inflationary pressure and potential asset bubbles, aka crypto, The use of QE and its effectiveness can be a topic of debate amongst economists and policymakers. So with quantitative easing, you get a level of stimulus put into the markets, which they used the quantitative easing to put in, the governments did, to buy crypto. And I'll show you the link. 2018 was a big year of quantitative easing. We did it all the way until about 2021. So what ended up happening here is they pumped the markets up big time. We had a collapse going into 2018. Well, it ended up happening in 2020, 2018, though. We had a big push down. And by 2020, 2021, we had this big breakdown here after we were pushing money. This was kind of like a dead period. All of a sudden in 2021, because of the blah, 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 and things like that, as you know, we had lockdowns and yada, yada, yada. We had more stimulus printed for more quantitative easing, and we hit another high. Well, once we had quantitative tightening, and we had a long look at it right here, and then we started easing again, and this was the result. Now we're back in a tightening cycle, and see the point? So quantitative easing, we have a lot of money to print. The governments could print money, and it allowed us to have a nice push up. But once that money tightened, and they had to do some interest rate hikes, you've seen this reverse. And these interest rate hikes aren't going anywhere anytime soon. We're probably going to have to go to 5 or 5.25, 5.5, maybe even 6%. But we might get 50 basis points. So now that we know what quantitative easing is, we've talked about quantitative tightening and how it's a bad thing. So quantitative easing, they're spending money to buy bonds. They're putting money into risk-on assets. They're putting money into crypto. They're able to print money to pump the markets. Now, quantitative tightening, on the other hand, is the complete opposite. So quantitative tightening is the opposite of quantitative easing. It is a monetary policy tool used by central banks to reduce the money supply and prevent inflation from rising too quickly. This is typically done by selling government bonds or other securities that were previously purchased during a quantitative easing program. AKA, they're not printing as much money. They got to take money out of risk-on assets because they don't have the capital to purchase it. Crypto is one of them that they like to dump and pump during quantitative easing and dump in quantitative tightening cycles. QT is used when the central bank wants to tighten monetary policy in response to concerns of rising inflation or other economic imbalances. By reducing the money supply, interest rates are expected to rise, which can cool down inflation and prevent economic bubbles from forming. The problem with this is we're in a speculative asset right now. Crypto is speculative, and with the things going on in regulatory frameworks, 95% of crypto is likely to go goodbye by, and that's why I continue to tell you that we're going to have a historical collapse that's already started that's going to wipe out retail. And I talked about the historical collapse at $1.66. Now we're sitting at 38.5 cents. Imagine if we get the drop I'm talking about next. That would be essentially enough to wipe out retail investors. It already has been, as a bunch of people that used to watch or want to invest no longer can. So now that we've gone deeper into what's going on, this created, with the quantitative tightening after the easing, it created a monster topping reversal. And you can see this kind of looks like an M here. In the initial spot here, we had a nice M topping reversal, came around, even tried to pull up here, but we couldn't break out. And now we created this downtrending resistance that's becoming a pain in the ass. So now everybody's like, oh, well, what's a topping reversal? Well, we've already went 13 minutes. We might as well go a little bit longer. So a topping reversal is a tactical analysis chart pattern that is used to signal a potential trend reversal from a bullish to bearish trend in the market. It is also known as a head and shoulders pattern because it looks like a head with two shoulders on either side. And now as we take a look, we can say shoulder, head, and this could have been a shoulder. Now we're trying to break back out, and now we've got another consolidatory phase after what could be a head and shoulders pattern. Now it's trying to pop up, and it's failed all the way across. So this is the head, shoulder. You can even say maybe this is the shoulder that pushed down. So that's just to give you a little bit of an idea. So, and it looks like a head with shoulders on two sides. The pattern consists of three peaks, and the middle peak being the highest, and the other two peaks being slightly lower. The middle peak is called the head. The other two peaks are called the shoulders. The pattern is complete when the price breaks below the support level, which is the level of which buyers have been stepping in to purchase the asset. The topping reversal pattern suggests that the bullish trend is losing momentum and that a bearish trend may be about to start. Traders may use this pattern to make trading decisions such as selling their holdings or entering into short positions. Now I want to show you, before I let you go, and after this I'll end this update, but I want to show you 5 key ways or 5 signals that flash that allow you to know that we have in fact had a topping reversal take place in the market. 1, the aforementioned head and shoulders patterns. As mentioned earlier, a head and shoulders pattern is a classic topping reversal pattern that consists of 3 peaks. The middle peak is the highest, and the other two peaks and slightly lower. Traders may look for this pattern to signal a potential trend reversal. 2. Divergence. Divergence occurs when the price of an asset is moving in one direction, but the momentum indicator is moving in the opposite direction. This could be a sign that the bullish trend is losing momentum and a bearish trend may be about to start. 3. Rounding top. A rounding top is a less defined version of a head and shoulders pattern where the price starts to flatten out and form a rounded shape. This pattern can also signal a potential topping reversal. 4. Decreased volume. Decreased volume is another signal that the bullish trend may be losing momentum. A decrease in trading volume could indicate that buyers are losing interest and the price may soon start to decline. And 5. Overbought indicators. Overbought indicators such as the Relative Strength Index, RSI, can signal that the asset is overvalued and due for a correction. If an asset is overbought, it could be a sign that the bullish trend is reaching its limit and may soon reverse. And a notable, an honorable mention here, number 6, the Bart-Simpson top. When the pattern forms what we call a Bart-Simpson top, you will get a drawing as such, or should I say a formation as such, as you'll come up and then the pattern will come up and then all of a sudden you'll see this as the pattern starts to come down. Better known, if we come up, as the Bart-Simpson top. So that is the honorable mention number 6. Make sure to hit that like button if you got anything out of this update. If you want to trade like I do with BITGET and or MEXC so you can buy XRP in the USA, the link is in the video description below and the pinned comments below. Also, if you want to show your support by paying it forward and join Tom's Army, that would be the greatest gift of all, and that is also in the pinned comment below and the video description below. Hashtag be better, do better. Hashtag FUD Assassins. And remember, help one person each and every day. Because if I don't do my part and you don't do your part, what the hell is the point in this journey? And remember, you're supposed to be buying this as we're sub 40 cents. Just in case we don't go sub 20 cents, because nobody has a crystal ball. But what we do think and what we do feel is, knowing the market conditions and knowing what's going on with the bond markets, I believe we've got a great grasp on what's going on. And I believe if we do this right, and that means we buy it to the bottom, we will have exponential wealth coming through at the end of 2025. Stay blessed, everybody, and continue to stay true. And don't get caught up in this historical collapse that's going to keep retail traders reeling.